Welcome back, everybody. This is Jim Oliver, your host, and my co-host today is Nick Kosko. Welcome, Nick.
Hey, thanks for having me. It's always a pleasure.
Yeah, thank you. And it's great to have you on here. I love talking about IBC or talking about cash flow or building wealth or abundance versus scarcity and how we're going to break away. And one of the things that we talk about just about every day is infinite banking and how somebody can take over the banking function in their lives and create wealth by doing that, either recapturing interest that they would have paid to another entity, recapturing lost opportunity costs or eliminating lost opportunity cost. And it really comes down to exactly how am I going to do that? And, Nick, one of the things that I think makes us unique at Create Tailwind is not only can we talk basic IBC, how to take over your debts or pay for your taxes or, run your household, but also how to create wealth and also how to run your business using IBC, what we would call maybe advanced IBC.
Yeah, thinking long term, looking at it in a bigger way than just what's inside the walls of your home.
Yeah, and by the way, businesses or all households are really run like a business. So when we get into this business owner section, it's really not to say, hey, you're either this or maybe you're not this business owner person. That's not the point. The point is that maybe we should run our household more like a business. And how can we take our infinite banking, say, to the next level? And, I think it's really interesting when I see a lot of people out there that are talking about infinite banking, and they're great marketers, but quite honestly, I can tell pretty quickly they're really not doing infinite banking, and they're not building wealth with infinite banking. And I just wonder, okay, you read a couple of books and you get on a webinar and you're good to go. Well, we can show you how we've bought businesses, bought all kinds of things with infinite banking, how we're literally walking the walk, not just talking the talk.
And it comes down to, now we say this a lot, is just turning off the noise. The noise is telling you that you only can remain in those four walls of your home, right? And that you can only, finance your cars, finance your college, whatever that is. And we're conditioned to that, but really everyone can really grab the bull by the horns and do some business, implement some business ideas, do some entrepreneurial things that can create passive income, that horizontal income that can lead to freedom, can allow quote unquote retirement to happen a lot earlier than what people ever imagine is possible.
Absolutely. And instead of retirement, as we like to say, financial freedom or being financially independent, so that our young viewers out there, listeners that are in their 20s and 30s, they don't want to have to think about working till they're 65, 70 years old. And if they don't secede from that Social Security and that whole system, they don't, I would really hate to be around 50 years from now and see how much they're paying in tax in their quote retirement years. So let's just give, for the podcast today, Nick, let's go through two examples, kind of IBC, as it's really written about a lot, as far as let's use it for buying cars, because everybody buys cars. And if you're in New York City and you never bought a car and you don't drive, okay, I get it. You're smart enough to put it into another context or another purchase, but everybody else in the United States more than likely buys cars. So let's start with that, and let's look at an example or how the different options to buy cars, what our options are. Okay. So first we have.
Would you call this like IBC 101?
Yeah, I like that, Nick. IBC 101. So if we're going to go buy a car, all right, we can, to purchase the car, we could finance it. We could.
What do you mean by that?
Well, we go down to the dealer and we get a loan or a lease, right? A lease is just another way to finance the car. and
Okay.
we pay payments to a financial institution, and they send us a nice little reminder every month, or we set it up on auto pay, and we pay them interest over the whatever period that we want, and then we normally make those decisions based on how big we want our payment to be, what kind of interest rate that the finance company is offering us for different terms or different loan terms, etc. And if we lease it, then we're really renting the use of the car for a certain amount of time, and the finance company is figuring out what the residual value is going to be when we don't want to lease it anymore, when we don't want to drive it, right?
Yeah, the one of the earliest questions you're going to get from the sales guy is what monthly payment are you shooting for?
That's right.
You know, everything's going to revolve around what is that monthly payment. You've done your budget. You figured out, hey, my what I can afford is $388 a month, or whatever that is. That's what you're talking about. It's coming in with that mindset, right?
Absolutely. And by the way, if you come in and you say I want a $388 payment, now nothing against you guys that are in the car business, and I have some friends in the car business, but that is not the payment that you're going to come away with. It's going to be $500 or $600, and they're going to. They're good at their jobs. They know that if you can afford it, it's going to be $500 or $600 a month. It is not going to be $388, right?
Yep, that's right.
And it doesn't matter where you start. If you started at 1,000, it's going to be 1,500. It's just that's the way they operate. Then they'll back down, and you'll settle at $1,350 a month, and you'll go, okay, I think I got a good deal, right? Okay, because hey, there's a reason why car lots are so nice. Right? These guys are not dumb. Okay.
Prime real estate is the biggest dealerships here in town, not by chance. Right. So what's the other way people generally go in and buy a car?
Okay, we could just go in and pay cash, right? Now we could say,
and that's what the financial entertainers are telling us to do.
That's right. And you know, hey, I got enough money. I'm going to go pay cash for that car, whatever it is. Again, it doesn't matter. To take some of the negotiation out, because it's like, hey, I'm going to pay cash. What's the cash price? It doesn't have to go with the payment, and it's not the smoke and mirrors as much. It's just, here's the price. Buy it. Don't buy it. Doesn't matter. Now, when I do that, though, that money has to leave the account when I just pay cash traditionally, and I have what's called lost opportunity cost, because I lose the interest that money could have earned me, or that investment return that money could have earned me, whatever account I'm taking it out of. Okay. Now,
yeah. So you just basically said that we finance it either way, right?
We finance it either way, right? We either give up interest or we pay interest. There are no exceptions. A very wise man who's going to be 88 years old here about the time that this podcast comes out, R. Nelson Nash, one of our great friends, is and a great mentor. Nelson reminds of that in his book, How to Become Your Own Banker, or Becoming Your Own Banker. Sorry, Nelson. I've only read the book about 100 times. But Nelson says we finance every single thing that we buy. We either pay interest or we give up interest that we could have earned somewhere else. There are no exceptions. Now, I'm not going to do the Southern draw when he says there are no exceptions. See, I kind of did it, but I can't do it as well as some of our friends down there in Birmingham. All right. I'm a Northerner, I guess. Okay. So the other thing that we can do as well, we could use our IBC system, right? Our infinite banking concept system. Now, we call that being a wealth creator, and I'll show you why. That is the method. All right, so let's just look at these methods, okay? Now, you guys are going to find out really quickly why I wasn't a graphic artist in college, because my drawing is going to make sense, but it's not going to be pretty, okay?
For those of you on the YouTube, watching this on YouTube, you're in for a treat here.
That's right. This is going to make, I wish that I had more ability in this area, okay? Now, we all start.
As you said, though, the principle is very sound here, and the visual is impactful, what you do here.
That's right. I'm going to use colors, too, today, Nick, so it's going to be a little prettier than normal. All right, so we have two lines. on this axis, right? We have time and we have value. Now, we all start on the $0 line. So let's take our debtor. Now, our debtor, they don't have enough money to go buy the car. So they're going to go finance it. They're going to go buy it and pay somebody interest. Okay, so they get the loan and they start to pay back the car. And about the time the car gets paid back, Nick, what happens?
They got to go buy a new one.
It wears out.
They feel like they need to go buy a new one. Yeah.
Right? Now, Nelson likes to ask this question in his seminar when he used to go around the country doing seminars and showing people and educating people on this. Is he'd ask you, what was the first car you ever had? You know, blah, 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 blah. Okay, we know that your car is going to wear out. But here's something that Nelson also pounds into our heads is if this first car costs X, what is the next car going to cost?
X times
X plus.
0.1.
Right,
yeah.
X plus. I go buy the car, I pay it back, and about the time that I pay that one back, it wears out. I got to buy another one, and then another one, and then another one, and then another one. Now, by the way, every time it gets more expensive. Even if I'm buying the same car, it gets more expensive. But
absolutely,
I'm probably upgrading my cars. So it's getting more and more and more expensive. And in the beginning, I'm paying interest. Every time that I buy these cars, I'm paying interest, and somebody is making a nice living from me, right? And I don't begrudge anybody making a living, by the way. But if we understand what's happening, we'll know what to do. Another great Nelson Nash quote. So something else we could do is we could pay cash for this car. So what we
delayed gratification.
That's right, delayed gratification. In the book, A Road Less Traveled, Scott, I think it's Scott Peck, is that right? He says, if you can delay gratification enough, which is called what? Discipline, you can have anything that you want. Okay.
Discipline equals freedom.
That's right. Absolutely. So we save up for the car and we buy the car, and where are we at?
Back to zero.
Okay. Now this downturn creates lost opportunity cost, right? Now, as soon as we buy that car, what do we have to start doing?
Saving for the next one.
Save for the next one. So we save up a little bit more because that doesn't change, Nick. We still want a nicer car.
That's right. And the cars keep getting more expensive.
And the car keeps getting more expensive. And there's more features. Now it automatically charges my iPhone wirelessly. It has Apple Connect, so I can listen to all of my content on my phone, in my car. It has all of these bells and whistles. And not only does it have heated seats, but it has cooled seats, not just in the front seat, but also in the back seat. And my 10-year-old, she likes those heated seats in the back seat because, you know, we do live in South Dakota part of the time, okay? So it just keeps on going up and up and up, and our cost goes up, our lost opportunity goes up, and every time that we interrupt our compounding, we create lost opportunity cost. Now, this is really unseen because what would our money have grown to? Well, we don't know.
We don't even, we can't wrap our minds around that.
We don't calculate that. The interest we could calculate, but we don't, right? And because of this, we have to get out of that trap. So the way that we do it is that we create an account that grows like this, okay, like the blue line, and it has uninterrupted what?
Compounding.
Uninterrupted compounding, that's right. And then that blue line can be collateralized. And we can use other people's money because of it being collateralized to go buy the car at negotiated rates. And we can control it. Meaning we decide what our payment is. We decide how long we pay the car back. We decide all of that.
it's like a safety net. One of the arguments for paying cash is that, hey, if life happens and you fall on some tough times, you don't have to worry about your car being repoed.
That's right.
And in this case, you're getting that as well. You're in control. No one's going to come and take your car if you don't pay your monthly payment or don't pay on the car for a year or more.
Right. So the debtor lets the bank control the situation, right?
Yep.
The saver, the same thing. And the wealth creator, they're in control.
Yeah.
Now, I don't know who said this originally, but whoever controls the money makes the money. It seems logical. It seems basic. So all we have to do is control this, and we have to be a wealth creator. And if all we ever did with infinite banking, Nick, is this, well, we would be way ahead of the game. Agreed?
Yeah, absolutely, especially those of us that have many kids.
That's right.
All the cars we're going to finance in the house here.
Now, in the Costco household, when the time is right, there will be one other way to get a car or the use of a car, and that's a gift, right? Because pops and mom they're gonna say, hey, I could see Jake saying, hey, you know what? If I had a car, I could drive everybody else around, and this would be so convenient. And so, now that you're getting older, pops, I mean, you need my help. So I'm going to help Jake with that sale when the time comes.
Yeah, well, you just planted the seed because I know he'll listen to this. So I'm sure it's game on already in his mind.
Absolutely.
Well,
and if you didn't understand this, call Jake Kosko because he could explain this to you at 10 years old.
Well, what's interesting, you've got something on the screen here, and it's impactful because if you're the debtor and the saver over time, whether that's 30 years or 40 years, where do you land? You land back to zero.
That's right.
All right. You're going to need the cars. And like you say this all the time, unless you live in New York City, you're going to most likely need cars. So what do you get when you're the wealth creator? Well, you get to buy those cars, and you're way more than zero. You get, I mean, what is the dollars? It's tens of thousands of dollars, if not, for some of our clients, it's in the millions. Over
Absolutely.
30 years, if you were to look at that. I mean, Nelson walks through that in the equipment financing example. I mean, there's literally millions added by doing this process in your life. And so you get both.
So the equipment financing example is from 1984. So the car or the truck in that example, now there's trucks, there's tractors, and there's tree shears, okay, or a tree shear, is in that example. The car was about $60,000 or $65,000 with a $13,000 down payment, financing $52,600. Now that today could be a car or could be a pickup truck for people, right? So that example is as timely today as it ever was. And if you haven't had that example explained to you, let us help you understand it because it's so powerful. Nelson illustrates in his book how somebody creates $2 million of additional wealth and they don't change their cash flow $1. If that doesn't get your attention, if that doesn't make you go grab your book right now, then we got to check your pulse and make sure that you can still fog a mirror. Because we gotta get excited about that. Okay.
Well, Jim, we just talked about financing the cars. We called that IBC 101 for everyone just about in life. Okay.
Yep.
So what we're trying to do here is contrast, like, what is something that we could call maybe IBC 301 or 401 for the business owner? What does that look like for the business owner if they implement some of these strategies?
All right. So, Nick, I like the way you put that IBC 301 or advanced IBC or whatever. I don't know about you, but when I was in college, the basic classes I liked, the basic principles, but I loved when we started to get into the advanced courses to where I could really see some practical impact and you see some big impact. And I think that this is important because every business it has a business cycle. It's normally 12 months long. It normally starts in January and ends in December, but it doesn't have to. It could start in June and end, or I mean in July and end in June. A number of things, but we're going to keep it simple. And remember that you're running a business when you're running a household, so it's kind of the same thing. So just know that these principles, don't turn the podcast off right at this point. Watch this, and even if you're not here yet, you will be, okay? So we're going to call it, because we're so creative, XYZ Company. And here's our 12-month cycle, and we're just going to say it's January to December. Now, the goal of this business is to create profit, right? But unfortunately, we have to pay tax, or if the IRS is listening, then fortunately we get to pay our tax. No, I'm just kidding. And the goal is after that to have a residual profit, right?
Paid for the business owner to have. That's what they've worked their rear off for. Is right.
That's right. That's right. And this is what the goal is for every business, is to make money. Okay. Now, here's one of the challenges, is that business is seasonal. It has a high season and it may have a low season for sales and their revenue and their accounts receivables. Okay. Now, because of this, that creates a challenge. It's not just a flat line and the money comes in consistently and the business owner just says, well, I got money coming in, I got money going out, and I have my residual, and it's nice and easy, clean, no problem. But because of this, we have to have some kind of cash flow system. So how are we going to control the cash flow? Because maybe 65% of our business or more comes in 1 or 2 months out of the year, right?
Yeah.
Okay. Because here's part of the problem, Nick, is the payroll and the rent and other expenses might not be in the same season as our sales and our revenue. In fact, it might be the same every month.
Yeah, I was about to say it's more consistent.
It's more
month
consistent.
Over month.
Right. And managing and making payroll and everything, and paying rent and paying all your other expenses, a part of it comes down to how your accounts receivables come in. And sometimes they could be 30, 60, or even 90 days late. Now, when they're 90 days late, what's the business owner doing?
He's calling the bank.
He's calling the bank. But he's panicking to some degree a little bit. Like,
That's
hey, are these people going to pay us? Now, and one of the and so, because here's the other thing is, you have accounts payable to, say, your suppliers. Now, I'll give you an example.
Heavy. Yeah, calling everybody.
Now, by the way, if you don't pay your bills, then maybe somebody doesn't want to do business with you, or maybe your pricing changes, which would affect your residual. Now, let me give you an example of this, Nick, is in one of the companies that I own, we do business, me and my business partner, we do business and we buy things from China. And let's say that we send the Chinese an invoice for $1 million. Now, they might think that the invoice should be $970,000. Now, you would think that they would just pay the $970,000 and then we could argue over the 30 grand, right? Which would help our cash flow. But that's not how they do it. They don't send us anything until we resolve it. Now, again, I haven't spent a lot of time in this international business, but when I learned that, I thought, that doesn't make any sense, but that's the way that it works. So it's a game that they play. But because of that, if I called our suppliers and our payables and said, hey, I'm just waiting to get paid from these guys in Asia, so as soon as I get paid, you'll get paid. They'll say, sure. Yeah, that's not going to work for us. All right. So because we have to have credit from our suppliers for merchandise and we got to pay them per the terms of the credit, even if we're not paid, then we need what? For
Line
cash
of
flow
credit.
management, it's almost always necessary to involve the commercial bank for lines of credit and loans. Now, what do I mean by that? What's the difference? A line of credit is interest only, and a loan is amortized. Can a line of credit be turned into a loan?
Yes.
Absolutely. Who gets to make that decision?
The bank.
The bank. When do they make that decision?
When you want them to the least.
When you need them the most, and when things don't go as planned.
When they
We're
get
going to have to
nervous
go ahead and
about
convert that
you
loan.
paying them back.
Yeah, that's right. That's right. Hey, I'm a little worried that Jim can pay us back, so let's go ahead and convert that line of credit because we were really nice about that, and let's get our money back over 3 years, something like that, right? And you know what?
That's right.
We're kind of worried about Jim, so we're going to make the interest just slightly higher so that we can get our money back. Okay. But we have to have this for cash flow management, right? And
I mean, I know even nonprofits that have lines of credit open just in case.
Just in case, right? Whether you use it or not, just in case. So again, you have two different loans. The bank controls the amount of those loans, the terms of those loans, whether it's a line of credit or an amortized loan, the bank is in control. Now, what did I say about who controls the money? Whoever controls the money makes the money.
They make the rules.
And they make the rules, right? It's the golden rule. He with the gold makes the rules. Again, go back to Nelson Nash's book, Becoming Your Own Banker. Now, here's the other thing about the bank, too. They're greedy. They're greedy. They say, hey, the sales and revenue, you better be depositing it in our bank. And you're like, okay, well, I guess that makes sense. You're my bank. You're my banker, right? Now
they know something. They know something else.
Now, by the way, does the bank just say, hey, you got a great idea for a business and looks like everything's going good, and so we'll go ahead and give you money? No, that's not how the bank works at all. And by the way, too, every 90 days, they're looking at you saying, show us your books because we want to make sure we should still be giving you money, right? And they're auditing what's happening in your business. Okay. Now, the bank is not dumb. They do not give somebody money unless it is secured. Now, that means we need collateral. If we think back to how an insurance loan works, we have something of value, an asset, which is collateral. We collateralize that, and the bank or in infinite banking, the insurance company puts a lien on our asset. In the insurance contract, it's the cash value. Here, it could be a lot of things. It could be your merchandise or your inventory. It could be land, property. It could be labor. Your personal guarantee. Could be capital or equipment. But if something goes wrong in a bankruptcy, the bank is secured. They're going to get their money. Now, the supplier is not secured, right? I mean, they're unsecured. They're in a bankruptcy. They're going to get pennies on the dollar.
Whatever's left over.
Whatever's left over. That's exactly right. Okay. This is how businesses work. Almost every business in the United States, this is how businesses work. So all that we show businesses how to do is to do this. Have an alternative bank. Now, the alternative bank isn't controlled by the banking system or the commercial banker. It's controlled by you. And you have loans and lines of credit that you dictate the terms. No line of credit can be forced into conversion to a loan. Only you can make that decision. Now, here's another cool thing about this bank is there are tax benefits. And we'll tell you more about that if you want to understand how to build this alternative bank. Flexible loan terms, meaning you decide. And this account, it pays interest and dividends. Now, if I stop here with a business owner and I say, is there any reason, Nick, why you wouldn't want to have this alternative bank that you control versus the commercial bank.
No, there's no reason why I wouldn't want that.
Right. But what's one thing that we hear, Nick?
There's got to be a catch. What's the catch?
Sure. Well, one, you have to build that alternative bank, that money pool. You have to build it. You have to capitalize it, right? That's one thing, but that's okay because we have capital as a business owner, typically.
Yeah.
Okay. But the other thing that we hear is, well, my commercial bank, it's insured, it's secured, right? All right. So I don't want to burst your bubble here at the end of our recording, but let's look at something really quickly here. The FDIC, okay, the reserve is $88 billion. Okay. That sounds like a lot of money.
Sounds
right,
like a
Nick?
lot. Yeah.
Yeah.
That's right.
I mean, I'd like that to be my checking account balance. But here's the problem with that reserve amount is the total U.S. bank deposits that's insuring is $7.1 trillion. Again, that's about 1% or so. So that means that your money is 1% of it is secured. Okay, so it's really not secured. Now, when I look at this and I think to somebody, hey, how am I going to build my own banking system? And why would I want to do that? Why would I not want to do it? And what's the catch? Well, I got to learn how to do this. And regardless, Nick, if you're at the 101 level or you're at the advanced IBC level, you have to learn how to do this. So if you wanted to go learn how to be a better golfer, what would you do?
I'd hire a coach.
I would hire a coach too, or a guide. Or have you ever heard of a business consultant to help you grow your business? Well, that's really, you need that. Because if you don't, you're going to make mistakes that have unintended consequences. You don't need to make mistakes. Borrow somebody else's experience. Taking it all the way back to the very beginning is we do this. You've bought multiple cars using your IBC system, right?
As you have.
As I have. And we've bought real estate and businesses and invested in business opportunities and grown businesses and used it for cash flow management of businesses. We've used it for all these things, and we can show you how to do that too. And that's why it's so important to go to createtailwind.com and learn how to do this and to get the help that you need. Now, the other thing is that if you learn something on this podcast or something intrigued you or you just enjoyed listening to it, of the silky sound of our voice, is share this podcast with somebody else.
Absolutely.
And then, because I'll tell you, one of the things that we try to do is we try to give more than we receive, right? And I want everybody out there to give. And our promise to you is that if you give this podcast to somebody and they learn something or they have a question, they can call us. They can set up time to meet with us, no obligation, right? We will answer their questions, coach them with no expectation of anything in return. Now, if they decide they want to become their own banker and they want to either be the basic infinite banking person or the advanced infinite banking person, we can help them implement that and do that for them, with them.
Well, I appreciate the example you've set. I appreciate the example you've set with all of that because it's been a gift to my family, my friends, and to the many people that we're sharing this with, because not too many people do business like that, and it's been a genuine gift to us.
Yeah, and I agree with you. I learned from Nelson Nash. Nelson has given me so much information, so much time, so much knowledge. He's never asked me for anything in return. And he has been an incredible mentor and teacher and thank God for Nelson Nash. And so that's one of the reasons that we have the same attitude of giving that we learned, again, partially watching Nelson and how he spreads this message. So Nelson, if you're out there listening, then one, happy birthday, because this should be coming out around your birthday. And then two, thank you from the bottom of our hearts. So until next time, if you want to learn more about infinite banking, createtailwind.com. I encourage you to go there. And next time, we'll have some more information to help you break away from the herd and to build your wealth, not somebody else's, like with Wall Street. Nick, thank you so much for your time and your input. I enjoyed it as always.
Appreciate it. Have a good one.
You too.